This technical analysis for stock ticker Meta, Facebook, is for educational and informational purpose only and should not be considered financial advice. Always conduct your own research before making any investment decisions. Maybe paper trade this strategy to get best learnings out of this. This is the brief on the critical technical analysis for Meta's big upcoming earnings showdown. Okay, so Meta. It's trading around $750, right? But look, it's staring down what you might call a catalyst compression bomb on October 29th. Why? Because you've got a potential Fed rate cut hitting right alongside its earnings report. Talk about an explosive risk-reward setup. So, how do we handle this kind of volatility? We need a plan. First, let's zero in on that dual catalyst and the expected swings. October 29th is the date. You've got the potential Fed boost for tech stocks, plus Meta's earnings. Wall Street's hoping for a solid 2-month growth there. Options, folks? Yeah, they're bracing for a big move, like 6% either way. Second, let's get the battle plan straight. Know the key levels. The stock's holding up pretty well on its 50-day moving average, and the RSI, that's the relative strength indicator, is sitting at 61.24. Now, the specific entry zone we're watching? $748 to $752. Your hard stop loss? $742. If that 50-day EMA, that's our key short-term trend line, breaks down, you gotta be out. Upside? Maybe a quick flip around $770, or aiming for that 52-week high near $796. Finally, and you really gotta watch this, there are 3 major landmines here. This setup looks good, yeah, but it's risky. 1. The binary outcome nightmare. If either the Fed or earnings disappoints, oof, could see a fast drop towards $680. 2. Liquidity chaos. Big volatility spikes mean you could get gaps and slippage where your order fills at a worse price, right? And 3. The valuation trap. Meta's PE ratio, price to earnings, is up there at 26.58. Basically, no room for error or bad vibes. So, Meta's $750 setup? It definitely offers some serious potential upside. But success really hinges on managing that risk and staying disciplined around those key levels.